thank you for tuning in. This is Shakeitha with Shakeitha and Me No Secrets, and there is no secret about what I am going to talk about on today. And so today I want to talk about term versus whole life insurance. What's the difference? And you're probably going to be surprised, such as I was. So just a little backstory about me. I've been licensed as a agent for about 3, almost 4 months, and like I said, I'm learning, still learning a lot about the industry. I love the industry. I have a passion for it, and especially in my community, because a lot of times we don't know about the financial industry or financial education, because we never was taught that, and these are things that are not taught in school, and that's for the majority of us in that case. But so like I got licensed in September, and of course I was with one company, and then I switched over, and I do believe that I will be staying where I am, because you just can't keep flip-flopping, right? And it's not like, for me, it's not about the monetary side of it, but money is part of it, because it's a business, and I'm an agent, and I need to make money, right? But anyway, but getting down to the difference between term life and whole life insurance, and what's the difference, you're going to be surprised, as like I said, such as I was definitely surprised about the difference in the insurance and why I made a decision to change. And we'll get to that change here in a little bit. But anyway, so if anyone in your life depends on you. Oh, and let me give credit to where credit is due. This information that I am talking about, it comes from RamseySolutions.com. Again, that's RamseySolutions.com. I will definitely put that in the content of this video once it is completed and uploaded, okay? So if there's anyone in your life that depends on you, okay? If there's anyone in your life that depends on you for income, you need life insurance. Hear me. You need life insurance, but not any old life insurance, okay? The right life insurance. Let's talk about term versus whole life. Okay, so life insurance may not be a fun topic, but it matters. Nobody wants to talk about life insurance. Nobody wants to talk about death, but it's something that we are all going to face at some point. So your two main options are term life and whole life. There's other options, but these are the two main ones, okay? So, but which one is better? So you say, so you ask, right? The first is a safe plan to protect your family. The second is a ripoff. Not my words, Ramsey's, okay? We'll walk you through the difference in term life and whole life, so you can see what we mean, right? And I'm going to say this side note. I do agree with that statement. I definitely agree with that statement, okay? I do. But not my words, Ramsey's words, but I do agree with it. So, what is the difference between term versus whole life insurance? We're going to give it to you straight. Term life insurance works, while whole life fails. The reason is simple, okay? The purpose of life insurance is to replace your income if you die, and to do it as cheaply as possible, right? Says, and that's exactly what term life does, okay? But whole life is costly and confusing because it puts investing into the mix with insurance. It adds up to an expensive mess, which we'll discuss in detail below, right? So we're going to discuss that. Yeah, we're going to talk about it, right? Like I said, I have my own thought about it as well, especially when I found out what I found out, let's say that, right? So for So just here in a nutshell of difference, okay, term life has a set premium that remains the same throughout the life of the policy, and it only lasts for a defined number of years. Whole life premiums can vary a lot. Last your whole life. It lasts your whole life, even after you're past the age when you need a death benefit for dependents, and are overcomplicated by bad investment options. Okay, frankly, the life insurance policy isn't a money-making scheme. It's not. It's there to provide peace of mind for your family. Okay, should the unthinkable happen, and nobody thinks about the unthinkable, right? Okay, and that's period. All right, and that's exactly the way term life works. It's simple, affordable, and reliable. Okay, think of term life as the family bulldog. Okay, a roof. Okay, so you hope you'll never need him to do his thing, but you're sure as heck happy to have him around the house. And that's basically what term life is. You're going to be happy that you have it around, okay? Because you don't want to have to use it, but at the same time, the unexpected does happen. Okay, of course, we know you're probably interested in building wealth and protecting your family along the way, and those are both legit goals, right? Okay, but each requires its own tool for the job. And you'll see much better results with both if you keep them separate. And I learned that, okay? So bottom line, don't mix insurance with investing. You got way better ways to invest than you'll find in an insurance plan, which sounds like more fun to you. Investing in growth stocks mutual funds so you can enjoy your retirement, or investing in a plan that's based on whether you kick the bucket. Easy answer. Okay. Now let's look closer to term life versus whole life. So what is term life? Term life insurance provides you life insurance coverage for a specific amount of time. Hence term, right? Term. If you get a 20-year policy, you're covered for that 20-year term. And there's some that's a lot longer than that. Okay? So if you die at the point during those 20 years, your beneficiaries, the people you pick to receive your death benefits of the policy, receive a life insurance payout. So, for example, if you bought $300,000 policy for a 20-year term and you die within the next 20 years, your beneficiaries will get $300,000. It's just that simple. And here's the key difference between whole life and term life versus term life. Term life plans are much more affordable than whole life insurance. This is because the term life has no cash value unless you die during the course of the term. We'll talk more about that in the whole life section. Okay? So, but that's not to say term life is a waste. Okay? We're not saying it's a waste, but there's a but. After all, you wouldn't skip out on homeowners insurance just because you never personally met anyone who lost their home in a fire, right? And you're willing to pay a small price for the coverage to protect yourself from the unthinkable but totally possible event. So term life's the same. You want it because life is precious. Hard things happen, and you care. Okay, you care about your family. And despite what you'll hear from whole life salesmen, life insurance has just one job: to replace an income. That's it. That's all. That's it. That's all. Right? That's one big reason we like it. So you gotta begin to like life insurance, even though it's a hard thing to talk about, but heck, we all need it. So term life, the pros and cons of term life. Sometimes term life gets hate from whole life marketers because term doesn't let you build cash value. It doesn't. That's the flat dead truth. Like I say, period. They're wrong, of course, but we get why cash value might sound like a smart idea just to spell it out. more of why we recommend term all day long. Here's a summary of the pros and cons. So here's the pro. Is way more affordable than whole life. The cons, you'll hear some smack about a lack of investment options, but this isn't such a con as it is a way of muddy the waters and sell the whole life, right? Pros of term life, okay? Gives you the option to invest however you prefer instead of locking your cash into a very low return investment. There's no cons after that, okay? And then pros for term life, okay? It allows you to move toward becoming self-insured more than that below, okay? So remember, the only job life insurance has is to replace the policyholder's income from just about any angle. Term life gets the job done better than whole life, okay? Of course, no one wants to use their term life insurance policy, but if something does happen, at least you know your family will be taken care of. They'll still miss you, but they won't miss you and wonder how they're going to pay the bills, right? That's the most important part. So let's talk about this whole life, right? So what is whole life insurance? Okay. Sometimes called cash value insurance is a type of coverage that you guessed it, last your whole life. Whole life plans are generally much more expensive than term life. There are a couple of reasons for that, but mostly it's because you're not just paying for insurance here, okay? So whole life insurance costs more because it's designed to build cash value, okay? Which means it tries to double up an investment account and life insurance, blending insurance and savings account into one product. That makes no sense. And I let me say something. At the time when I heard it, I thought it made a lot of sense until I found out something else, and we'll get to that, okay? It's like training your house cat to be a watchdog. She might learn how to scratch a few intruders, but she'll never really guard your property, and she'll be a miserable pet. Think about it. That's deep. That's deep. Okay, well, anyway, here's another truth about the difference between whole life and term life insurance. If you follow, now Ramsey has like 7 baby steps. You won't need life insurance forever, okay? And I totally understand that, and I'll get to that later, okay? Ultimately, you'll be safe. You'll be self-insured. Why? Because you'll have zero debt, a full emergency fund, and a hefty amount of money in your investment. Hallelujah, right? Okay, so whole life cons and pros. Y'all want to get into that? Y'all ready to get into that? Okay, we're gonna get into it. So we don't have a lot of positive things to say about the whole life insurance, and for very good reasons. It's one of the worst financial products on the market. It's confusing, and it's a budget buster to boot. Okay. Now, these are not my words. These are Ramsey's, okay? But we'll just add this chart. I have a chart there. And like I said, you can actually go to the site and look at it yourself. Chart to make the problem crystal clear. And I get it. I totally get it. So let's talk about the cons of whole life. So it's far more expensive than term. And the pros to that is the only one we've discovered. Whole life is better than no life insurance at all, and that is definitely a true statement. So the cons of that, it tries to do 2 financial jobs, insurance and investing at once, but ends up doing neither well. That's deep, okay? So anyway, hunting for good things about whole life could become a new hobby. Ramsey don't really have anything good to say about this, but anyway, and again, I understand why. Okay, and like I said, we're going to get to that. So delays or stops you from ever becoming self-insured. Trying to think of, and that's the cons of that, and the pros of that is this: trying to think of whole life benefits could help you build patience. Okay, cons. You and your family can lose a ton of your cash value if you die without cashing it out. Still waiting. That's the pros. So and that's the thing. Let's talk about that. The cons here is that you and your family can lose a ton of cash value if you die without cashing it out. Now I bet you're wondering what that is, right? We're going to get to that, right? Okay, so the moral of the story is this. Keep your insurance and your investments separate. You don't want to spend years investing your hard-earned money only to leave it all to the insurance company. Be smart. Get term life insurance. Okay? And I'm going to say this, after, looking at all the information here and thinking about the whole life insurance, because I did have it, and in order for you really to truly get the benefit out of the whole life insurance, you definitely, you are going to, and especially on the cash value side of that, you truly do have to pay out a lot in order to even see the investments. And because the thing is, when you hear about the percentages of what percentages that you get from the investment side of it, it's fairly disappointing. Okay, it really is. So let's say we have a friend named Greg who is in his 30s and wants to get $250,000 of life insurance for his family, right? He meets with a whole life insurance agent who pitches a $260 per month policy that will include the insurance coverage and build up savings for retirement, which is what a cash value policy is supposed to do. Okay. On the other hand, the term life agent tells Greg he can get a 20-year term with $250,000 of coverage for about $13 a month. Okay, that's a $247 difference compared to whole life. Now, if Greg goes with the whole life cash value option, he'll pay a hefty monthly insurance premium, but it's because the part of his premium that isn't insuring him is going toward his cash value investment. Sounds good, right? Well, you think, but then comes the fees and expenses. Well, what about it? So in truth, the additional $247 per month disappears into commissions and expenses for the first 3 years. After that, the cash value portion will offer a horrifically low rate of return for his investment. And we're talking about 1 to 3% here. And that's exactly about what the bank, if you're putting your money in a savings account with a bank, about 1 to 3%, right? It's bad. So you're really not going to see anything for some years. We're talking about like some years, okay? But here's the worst part. Let's say Greg gets this $250,000 whole life policy at age 30 years old, right? He pays $260 per month with $15 going towards the insurance and the rest into the savings account with a 2% return rate. Now, after 40 years of paying way too much for his insurance, Greg is 70 and has $250,000 in insurance and roughly $180,000 in cash value. Then Greg dies. How much does the insurance company pay out to his wife and kids? $250,000. But wait, what happened to the $180,000 of Greg's hard-earned savings? My God. The insurance company keeps it. Sounds like a scam? That's because it is, okay? And so, and that's the thing for me. And I hear a lot of people push whole life, because you have the whole terminal life, your whole life, right? But you investing money into a cash value savings account, and then if something unexpectedly happens to you, this is the sad part about that. And this is why it is so important to be educated on, if you have a life insurance, to know exactly what you have. A whole life insurance policy sounds great. It sounds like a great plan. It sounded great to me until I really begin to understand, because like I said, being in the insurance industry, it's a lot of learning. It's educational, and there's a lot of learning. There's a lot of things you got to learn. And for me, in my community, in the black community, let me just go ahead and put that out there. I mean, not just my community, but I'm pointing that out is that we don't know any better. And I'm saying this in a general sense. I'm not saying everybody doesn't know, but in the general sense, most of us don't know. Okay. And I've talked to people who have whole life policies, and they really don't understand their policy. They really believe that they have a cash value, and they think they're going to be able to do something with it. The only way they're going to be able to do anything with that cash value is while they are alive. And then on top of that, I'm gonna get to that in more in depth how that works. But let's see what we got here. So Greg is in his 30 years and wants to secure $250,000 of life insurance for his family. He has budgeted $260 a month. So looking at this, okay, under the whole life coverage, you get $250,000. The premium is $260 a month. It invests $240 in investments and the investment values. So after 20 years, $772,225 in investment value under the whole life, and then after 40 years is $179,936. Now looking at the 20-year term for just term life insurance, you got $250,000. You're paying $13 a month, and you have $247 to invest in mutual funds, Roth IRAs, something that you can invest for retirement. Okay, so you're looking at after 20 years of investing $247, you get $213,812. Okay, after 40 years, you get $2.12 million. What's better? What's good? What's bad? I'll take the term for 100,000, Alex, or 2.12 million, Alex. Okay, so you see, only Greg was entitled to the money in that investment account. So Greg is the only one that is entitled to the money in the investment account, an investment savings account, right? So to keep it out of the insurance company's pocket, he would have needed to withdraw and spend it while he was still alive. Talk about pressure. Unfortunately, Greg died before he had the chance to live it up, right? Now Greg is rolling in his grave, and his insurance agent is staying in a 5-star resort on Greg's dime. Wow. Oh, I'm sorry. I simply cannot be passionate about that right there. I can't. And I have a passion to help people, and this is why I'm actually doing this video, is because my heart goes out to those, and I have a passion to educate people and to know and to understand if they have a policy, if they're looking to get a policy, which one is better. And still, even though I'm giving this information, you still need to do your own due diligence, okay? I mean, because the thing is, it's all left up to you what you choose and what you don't choose, okay? But this is basically just informative information, okay? But what if Greg instead chose the $13 a month, 20-year term life policy and decided to invest the $247 per month? He'll save but not choose the whole life plan. If he invests in good growth stock mutual funds with 11% average annual rate of return, it exists. Yeah, it exists. All the way, I believe, up to 13%, I think. But yes, it definitely exists. He would have about $214,000 in investment by the time his 20-year term life policy expires, and more than $2.1 million at the age of 70. Imagine that, right? That's a lot of bang for your buck, And we think Greg will rest much easier knowing his family will be staying at the 5-star resort. Yeah, most definitely. Most definitely. Okay, so don't wait until you need life insurance to get it, okay? Let's talk about it, okay? Look, this death stuff isn't easy to think about, but life is precious. Hear me, life is precious. We can't see the future and aren't promised tomorrow. No one is. Not me, not you, not my cousin, not my mama, not my daddy. Well, my mom and my dad, they're not here. Missed them much. And they were covered. The cost of not having a plan in place for the unthinkable is much higher than the cost of term life insurance. You need to keep your loved ones protected, okay? The ideal time to buy life insurance is when you're young and have a clean bill of health, especially because life insurance companies look at risk of persons purchasing the policy when underwriting it. So if you're in the market for new life insurance or want an expert to talk, I recommend, of course, myself. So we can sit down, have a one-on-one, and we can talk about it, and so you can see your options. And not only that, and see, how you can fit it in your budget. Because I know some people are definitely strapped, but it may take a couple of not going to Starbucks. Me, I love Starbucks. Cutting out some sodas or something like that. To put it in your budget, but that'll be something that we would do, such as an F&A. But let's get back to here. Don't let another day go by without being protected. Okay, so like I said, I'm gonna drop my link below this video. Inside this video, I'm not sure exactly where it's gonna be, but it's gonna be somewhere where you can actually click on it, set up a one-on-one with me, and we can definitely talk about it. Okay, and get you some protection, right? So term life versus whole life. We got your frequently it's like questions and answers and questions. I said it all backwards anyway. Frequently asked questions. That's what I meant to say. FAQs. That's what I'm saying. Right. So is term life better than whole life? Okay. Yes, it is far better to get term life than whole life. We don't want you to get ripped off. We do want to see your family well protected, okay? And we for sure want your financial future to include wealth and the chance to become self-insured. Okay, the only kind of policy that lets you hit all those goals is term life. But whole life misses the mark in every department. And just kind of thinking about the whole life, and I don't believe it was stated in this document, but think about it. In the event that, say you had the cash value of $180,000 and you decide, because you can use it for whatever you want to, because it's yours to use at that point. Well, kind of sort of yours. Let me say that. So in the event that, now hear me, you borrow the $180,000 from yourself. That sounded bad. You borrow the $180,000 for whatever the purpose that you need it for. But here's the kicker. You have to pay yourself back. Hear me. Now, in the scenario of Greg having the whole life policy, and say for instance he borrowed the money, right? And he did what he did with the money, whatever the case may be. And so he had to start paying that back plus interest, right? They don't tell you that, right? Plus interest. Now in the process of that, think about it. In the process of that, if Greg so happens to pass away, and he kind of lived it up on the $180,000. So in the event, now mind you, his policy that he got on his death benefit side was $250,000. Now hear this. In the event that, say, Greg didn't pay all that money back that he borrowed, hear me, borrow from himself, and he doesn't pay all that back. Well, check this out. In the event something happens to Greg, he passes, they're going to take whatever Greg owed from that $180,000 that he borrowed from himself. They're going to take it out of the death benefits. And just hypothetically saying, what if he only had, if he didn't pay that, what if he didn't pay anything on that $180,000? Something just happened to him. What would he have? What would the family have left to, give him a proper burial? Let's check that out. Let's see. What would he have? You got his death policy is death benefits is $250,000, and he borrowed that $180,000, right? And he didn't get a chance to pay it back. Hold on, let me redo that. I wish I had share my screen so you can see this, but I'm gonna run the numbers here if I can get my thing to type right. And we're gonna say, and if you have a calculator, you can actually calculate this yourself, right? So that leaves the family with $70,000 to live on once the funeral costs and all that. This is all that's left. So you tell me if whole life is better than term. I said, because the thing is, here's the deal. Because with a term life, like I said, you can pay approximately $13, depending on how much cover that you get. But that's just an example. $13, and then that $247 that you have left over, you can invest in a mutual fund. So in the event of something happen, guess what? You got the life insurance that will cover the death, burial, and then you have the mutual funds, the investment, both. So you have both. So you're looking at, like I say, it just makes complete sense. It just makes complete sense. Can't be no plainer and simpler than that, right? So it says, how much life insurance do I need? Let's talk about it. So you need policy coverage equal to 10 to 12 times your annual income. Say you're making $50,000 a year. You need at least $500,000 in coverage. That replaces your salary for your family if something happens to you. You can run the numbers with like a term life calculator if you choose to. Don't forget to get term life insurance for both spouses. So you need coverage and your spouse needs coverage, right? And if you have kids, cover them too. Because, sad things happen, unexpected things happen to our children as well. So yeah, most definitely get life insurance. So how long do I need term life insurance? And that's the thing. So what's recommended policy with a term will see through until your kids are headed off to college and living on their own. That's anywhere from 15 to 20 years depending on your kid's age. So why so long? Well, a lot of life can happen in 20 years. A lot of things can happen in life in 20 years, right? So let's say you get term life insurance in your early 30s. When you and your spouse have an affordable 2-year-old toddler, okay, your laser focus is on paying off all your debt, including house, but you have an eye on retirement planning in the future, right? Fast forward 20 years. You're both in your 50s, and the little pint-sized toddler is now a college grad. The years went by fast, right? But look where you are. You're debt-free with your 401k, savings, and mutual funds. You're sitting at a cool net worth of $500,000 to $1.5 million by working the plan. You built up your net worth and your peace of mind. Now, if the unthinkable should happen, even without life insurance, the surviving spouse could live off your savings and investment. Congratulations, you become self-insured. So, your need for life insurance has shrunk or vanished by now. So that is definitely a benefit. And knowing how long. So and it makes complete sense, right? Right. Because then you become self-insured, and that's the goal, to become self-insured. But in the meantime, if you don't hit that 1.5 million, depending on how old you are, right? You still have coverage. right? And you still can be working on investment, because you know what? Again, we're not promised tomorrow, but you are definitely covered. So what happens to term life insurance at the end of the term? Is nothing sensational. The policy just expires, but you won't notice. You'll already be in the money. You already be in the money, because like based on that example, you're good. I mean smooth, good, right? Okay, so what information do I need when getting a life insurance policy? Okay, applying for a life insurance will mean providing some personal information. So let's look at a few of the things you'll need to answer as you look for coverage. First thing is, do you already have existing life insurance? How's your overall health? Any medical history or serious illnesses? What's your household income? How much are your monthly expenses? How much debt do you have, including a mortgage? What plans have you made towards your retirement? What are your plans to cover college for your children? Have you thought about how you want to pay for funeral expenses? What's your strategy around estate planning and tax? Do you have a will, and does it include plans for a trust? What's your age? The ages of your children. So those are the things that you will need when getting life insurance. And like I said, if you, after hearing this information, and I really hope that you got value. Really hope that you got value from this, because like I said, a lot of times we don't know, we're not educated, and we didn't even know that, we can build from having life insurance, and go from there, become pretty wealthy, right? Become pretty wealthy. If you are educated and know what you want. So, like I said, I will drop a link, and we can have a one-on-one and see what we can get you covered, get you and your family protected, because that is essentially the goal here, is to make sure that you're protected for the unexpected, right? And so again, link in the bio. If you want to look more on that, do your due diligence to make sure that you understand insurance and why it's important that you have it. I just want to say thank you for tuning in. I am Shakeitha with Shakeitha and Me, No More Secrets. And again, there is no secret about what I'm going to talk about. So again, talk to you soon. Have the most amazing day.